Let's talk to Robert Sijpesteijn. He is a sales trader at Ayondo. Very good morning to you, young Robert.
Morning.
Right, 7 thoughts-provoking slides as always. Let's kick off with the first one, the ESMA Changes. Read the headlines this morning. Run us through that, please.
Yeah, so this was implemented sort of yesterday and has been forthcoming pretty much this whole year. Everyone was expecting it, but really it's just taking effect on CFDs and spread betting at the moment, so any sort of leverage finance that side. What they've done is they've increased the margin pretty much across the board on all products. So, you know, with Ayondo, previously you might have been able to trade indices at 1% margin, so you're getting 100 to 1 leverage, and now the margin requirement for all major indices at least is 5%. Similar with stocks, you were trading maybe at 5%, 10% margin, now across the board at 20% as well. So it just makes quite a new feature on the platform. Unfortunately, you know, not everyone's always happy about this, but these are rules that have come in from Europe, and unfortunately everyone's had to abide by it. So this is a new feature on the platform and will be across the board for all spread betting and CFD platforms. The one thing to note, though, is it is specifically for retail clients. So we do have a lot of people coming on board and saying, okay, you know, how can I get these leverages back? And a lot of people are looking to trade abroad, you know, offshore, and they'll be able to get higher leverage there. But certainly if someone is a professional trader, if they've had experience in a financial background, they've got a significant portfolio size, or they have, you know, been trading significant sizes over the past year, those would be enough requirements to then reclassify as a professional. So that's one thing to note, you know, with your broker, if you're with Ayondo, for example, even if you're classified as retail, you can always reclassify, and that way you can get the higher high leverage back for specific people that want that. You know, the main reason it was brought in was certainly for security, which is a great thing. But you know, it's not the end of the line.
Okay, so what are the new margin closeout rules?
Yes, so that's the other feature. So previously with Ayondo, you were getting liquidated when, you know, hopefully something that never happens, but if you were going into liquidation, it does, sadly, it does happen to some people. If you go into liquidation, it used to be at 80%. So whatever your cash balance was, let's assume you had 10 grand on the account. If your losses got to 8, you'd be closed out and you saved 20%. Now, the way that ESMA have changed the rules, it's all based on the amount of margin that you're using. So assume the same scenario. You've got 10,000 on the account. If you've got trades running and you're using £5,000 worth of margin to cover those trades, you're closed out at 50% of that value. So when the account balance drops down to a value of £2,500 now, you're liquidated.
You're out of
so there are a few new rules, and it's just important that people are aware of them because they are big changes. And it will affect trading. So the most important thing is that that everyone's aware and ready for that.
Right, let's move swiftly on to suggested portfolio feature. What is this telling us?
Yes, so this is actually a brand new feature brought on by Ayondo. It was actually released yesterday. And for social trading, one of the biggest factors is who do I follow? And you know, as a account manager or sales trader there, we are helping people discover who's trading well, but we now have a new feature which is all just based off of metrics and statistics that the computer calculates, and it will formulate a suggested portfolio for that specific person. So this is actually the latest example. So I ran one yesterday, and this was the suggested portfolio that came up for me. And it takes a few different metrics into account. So it will always have 5 traders generally. It has to have a minimum of 2 real money traders because, you know, we have virtual traders as well as real money traders. And it will also create a portfolio which is very diversified. So in this portfolio here, for example, we can see we've got Simply Trades, we've got FSB Gold, who's a pure gold trader, we've got OB Trading, who we're going to take a look at a little later, forex trader, we've got FSB Zinzen, that's a bund trader, and then Dow Invest, which is investing mostly in the Dow. So that's the great thing about this portfolio is you've got a huge variety, a huge diversity there, but it's still getting a decent performance. They've got a risk score less than 5, and they're getting positive performance on an annual basis. So that's the new feature on the platform to certainly make social trading a little bit easier, and definitely try and help people who might not be quite as aware of how social trading works to build their first portfolio. Really.
Okay, well, let's move on to the OB trader.
Yes, so here we have OB Trading. So we can see, a decent performance. He's been with us for almost 2 years. about 17.32% performance so far, and that's pretty much all through trading euro US dollar. Again, his drawdown's been kept fairly low. You know, it's under 10%. He's got a drawdown of about 7.39%, and you know, quite a low volatility as well. Volatility is about 1.2%. So you don't see too many spikes in this chart. It's quite a nice slow upward trend. You know, in the beginning and in the middle there are a few movements there, but that's the great thing. You go back in the trade history, have a look why that might have happened, and then see whether that's someone you want to follow. And again, you know, he's got 5 flags, institutional trader, so one of the highest levels with us.
Okay, so let's talk about strategy on the next slide.
Yeah, so here we can see his trading strategy. What's nice to see is, you know, we brought in some traders and they might be DAX traders and they're pretty much always going long.
Right.
OB trading goes both directions, you know, long and short. It's more of a technical analysis. His holds tend to be anywhere from 1 hour to about 5.
Okay,
Rarely
so he's a
holding
day
throughout the day.
trader.
Yeah, he really is a day trader, rarely holding for more than a day. You know, and fairly small stake sizes, low risk per trade. You can see there the risk per trade is generally under 0.5%. So yeah, definitely an interesting one to monitor. But bear in mind also that is a virtual money trader. But he's been with us for, you know, over a year. And if you've been with us for that much time, you are definitely, you know, looking to be getting decent rebates through us. So what would be the reason to stop trading? And hopefully he'll continue to do so.
Okay, so let's move on to reporting season. The FAANGs. I didn't realise the FAANGs have got a bigger market cap now than the FTSE 100, which is
it's unbelievable. And yeah, it's been quite a wild couple of weeks. Obviously, we've had all of them report now. Apple was the last to report, and that was yesterday. And you know, it's been a bit of a mixed bag, really. Obviously, Facebook plunged quite a lot. It was down over 20%. Netflix also down around 11%. They would, you know, off target by about 1 million subscribers this quarter, so they really missed their targets there. Google, on the other hand, did well, and Amazon did fairly well in terms of its reporting. It jumped up about $60 and then just seemed to retreat for the rest of the day, which was quite an interesting one. Whereas Apple, it hit its record high, it went above 200. I think it went up to about $201.50. And you know, they beat everything. Normally they have a very poor quarter this quarter, but with the new iPhone X, they were selling significantly more. They were expecting sort of their average revenue per item to be about $690, I think it was, and it was hit at about $735.
Okay.
So they really outstretched themselves and did very well. But what's interesting to note is that more the services side of things, the service techs, have sort of done not so well. If you look at Facebook, Netflix, they're just providing a service really, whereas the goods or the product tech sides have performed maybe a little bit better. If you look at Amazon and Apple, who've sort of, you know, beaten their targets. Amazon's a little bit of a funny one because it's now come down. We're going to take a look at that because maybe that's a potential buying opportunity. But I definitely think, you know, with Apple having done so well and climbing up so high, hopefully that then rallies the rest, because this really was a real confidence trade. You know, if you look at the performance of these over the last year, it's been phenomenal.
Hundreds and hundreds of percent up over the last number of
unbelievable.
years. Okay, so let's talk about a buying opportunity.
Yeah, so taking a look at Amazon, so we can see here sort of the figures when it reported. On the day that it reported, it jumped up to a high of about $1,875. And since then, it's come down. It's almost down $100. So it's below that sort of opening point of that day. But if you look at the growth and the figures that they've reported, it really is, you know, quite staggering. So they had 39% growth year on year. And on top of that, their earnings per share were way higher than what was expected. They were expected $2.50 and, you know, coming in at $5.
Wasn't it? Yeah.
So really was quite an interesting thing. I was doing some research and then having a look and see what they're trying to, you know, do their main factors on in terms of investment and growth for the upcoming year. And a lot of the revenue that they're getting is coming through advertising, and that's what they're putting majority of that into. And the great thing with Amazon is they really see where their advertising goes, right? So they can see what products are actually being bought on their platform themselves. Whereas if you've got Google advertising, you know, that's great. You know, you can have a link and you can attach a cookie and see where that client goes, but you can't necessarily see what they're purchasing on that website, whereas Amazon really gets a full view. So from their perspective, that's something that could be very, very important for them, and it made up a huge amount of their revenue that they got this year as well.
Understood. Okay, let's wrap up with the last slide, the upcoming reports.
Yeah, upcoming reports. So these are a couple next week, which might be quite interesting to monitor. On the 7th, one again is a services tech. So, you know, is this going to go the same way that Facebook and Netflix have gone? And that's Snapchat, Snap Inc. So
I'm too old for Snapchat.
No, I don't use it myself either, but it's definitely, you know, a lot of interest in it in the trading space for sure. A lot of high volumes, a lot of volatility on Snapchat. So it's definitely something for someone who's got a little bit of a higher risk appetite to take a look into. Their forecasted earnings are about minus 32 cents. Last year at the same time it was minus 36 cents. So it's a bit of an improvement on last year,
yeah,
but it's still not a good performance.
Understood. And Walt Disney.
And yeah, Walt Disney is the final one. That's quite a big one next week. Obviously we had the approval between 21st Century Fox and Walt Disney to approve the merger from both shareholders. So that's really interesting feature. That's now been approved, and then the reporting's coming out, so it's going to be quite an interesting one to monitor and hopefully one to get involved in as well.
On that note, Robert, thank you very much indeed.
Thank you.